I want to welcome you to our webinar regarding EXIM Bank and SBA resources, featuring Eric Miller, who's the Regional Director of EXIM, and Reginald Harley, who is the Export Finance Manager of the SBA. My name is Jonathan Bricker, and I'm the Chair of the Arkansas District Export Council. In my primary role, I work for Regions Bank located in Bentonville, Arkansas. My banking career started off as international business development, and now I'm a commercial lender with a focus on helping commercial and industrial businesses located in Arkansas. I want to begin today by thanking our sponsors, the Arkansas Economic Development Commission and Arkansas Manufacturing Solutions. Without their commitment to education, we would not be able to host these webinars free of charge the way that we do. So we are extremely grateful to have them as partners. Yeah. I really do appreciate you all joining us today. For those of you that aren't quite sure of who the deck is and what we do, let me just do a real quick introduction. We're a private nonprofit organization that brings together experienced international business people with potential exporters. Each deck member has been appointed by the U.S. Secretary of Commerce for our real-world expertise in international trade. We have a ton of experience throughout the council in many different sectors. But that doesn't necessarily mean that we have all the answers to all the questions. But what we can do is introduce you to someone that can answer those questions. We're basically a community of connectors within the exporting world. My hope for the day is that you walk away with this webinar with a little bit more confidence in your exporting abilities. If you have any questions throughout the webinar and you don't really feel comfortable asking it here, you can reach out to us at exportarkansas.org and we'll have one of our members reach out to you. Basically, we want to be your strategic partner to help you grow your exports, which helps grow your bottom line. I'm also going to take just a minute to bring to your attention and invite you all to join us for our 14th Annual Governor's Award for Excellence in Global Trade. This will be a luncheon held October 3rd, which is a Thursday, and it's at the Robinson Hall in downtown Little Rock. What the award does is it recognizes the exporting success among Arkansas's manufacturing companies and agricultural companies that are actively trading in international markets. We present the winning company with a trophy and a certificate during the award ceremony. And then those companies are then profiled throughout the year as winners of the Governor's Award on our website and throughout social media. So I do hope that you'll join us in person. If you want to be a sponsor, I'd love to talk to you about that, but we are actively looking for companies to apply for this award right now. So feel free to visit with us after the webinar if you're interested in learning a little bit more about that.
And Jonathan, correct me if I'm wrong, there's 5 awards this year? Different awards?
Yes, correct. So, we kind of range our awards from everything from last year we had an Innovation in Exporting Award. We had a Resilience Award. For the last 2 years, we've had a Woman-Owned Exporting Award, which I'm a girl dad, so that one is kind of one that I always want to make sure that we keep pushing and pushing to have more women-owned organizations represented in our award ceremony. So, yeah, I mean, the award titles can range to a multitude of things. So don't hesitate to reach out to us to learn a little bit more about applying. I'd love to talk to you.
Yeah, and this also encompasses not only small businesses, but medium-sized businesses as well.
Correct. Absolutely correct. All right, before we begin, I just want to ask everyone to keep themselves muted and raise your hand if you want to ask a question. That way we don't get any background noise interrupting our speakers. So I appreciate everyone's help with that. Now I'll introduce you to your moderator this afternoon, Mr. Rudy Ortiz. Rudy is the previous chairman of the DEC, and he's the current owner of Strategic Business Services, where he helps companies in a wide variety of international business and exporting needs. He helps companies with their foreign market entry efforts and is the U.S. partner of Global Market Entry Consultants, which is a global group of market experts throughout 32 countries. With an MBA in international business, he facilitates various export and supply chain related classes for the deck. And he's also a certified global business professional, as well as a U.S. Department of Commerce certified expert and trade counselor. And for these reasons is why Rudy is the DEX education chair. So Rudy, thanks so much for spearheading all this. You always do such a great job.
Thank you, Jonathan. I really appreciate that. We're going to have a great class today. One of the limiting factors for any business is always capital. That you just have to have money to be able to expand your business, and without it, it really slows down your ability to grow your company. So as a consequence of that, the two speakers that we have today will be talking about the different programs that they have to be able to facilitate the capital and the ability to finance exports, and for this reasons these two gentlemen are going to give us great information, and obviously towards the end of the program we'll open it up for questions, though you can submit questions in the chat at any time, and we may cover them during the actual process of the session, or we may wait until the end. It kind of depends. But in any case, do feel free to ask whatever questions you have. At the very end, we will be providing their contact information, so that, as Jonathan said, if you feel like you want to ask us, one of the guys or any of us, a question privately, you can contact us and do so. And so with that, let's go ahead and go to the next slide, Ms. Heidi.
Did you want to do that poll about?
Yeah, you know what? My apologies. Yes, let's go ahead and start with the poll. It's always a good thing to know just exactly, who our audience is, how much experience they have with exporting. And so, yeah, if you'll put that up, that would be swell. So if you it's a interactive poll. If you guys would answer those questions, that would be very helpful for us to maybe fine tune our discussion and comments, so that we can make sure we answer and cover those areas that you may be most interested in. Okay, Ms. Heidi, I suspect that by now we should have most everyone having answered the poll questions. You want to publish the results? All right. So about 30% of the people have not exported in the past, and about 50% have. So that's very interesting. And see, have you ever used EXIM Bank resources? 80% of them have not. So certainly having EXIM here to discuss that is going to be very, very, very relevant. And I think, let me see. The next one is, have you used SBA? And as it turns out, 100% of the people have not used SBA, the Small Business Administration. So definitely relevant topic. Well, that's great. I appreciate that. All right, let's go ahead and close that out. I'd like to go ahead and start off with Mr. Eric Miller, who's the Regional Director for the Export import bank, otherwise known as the EXIM Bank. It is obviously a federal government program. And Mr. Miller is in the Houston office. He's the regional director there. He's a native of Texas, and he's been doing international trade for quite some time now. He's worked at other banks, and he obviously has dealt with lots and lots of purchasers, buyers of capital equipment in 33 countries. No small feat for sure. He's covered Africa, Asia, South America, and Europe. And he previously worked for EXIM as well. So he's definitely well geared to be able to answer questions about the different programs that EXIM has. And obviously, he's very passionate about his agency's capability to help exporters. As everyone here probably knows, the way that wealth is created is by bringing it from somewhere else, and that means exporting your products or services and bringing that cash back to the United States. So both Eric and Reggie, thank you for what you do and in making that happen. So Eric, if you would go ahead and start your presentation, would really appreciate it.
You bet. Yeah. Thank you, Rudy. And thank you to the deck for the invitation to participate. Let me share my presentation here. Let's see if this works. How does that look? We looking at the right screen, Rudy?
Yeah, we are.
Okay, good. All right. Yeah, the results were actually kind of surprising to me on the poll. I'm used to seeing more SBA customers and EXIM customers, but it looks like we've got somewhat of the reverse today, which is great. So I'm glad we're getting the message out. We're a small, for those that haven't heard of EXIM Bank, we're a small little federal agency that's also independent. We're set up in the executive branch of the government. And when I say small, between 400 and 500 employees. So, when you compare that to the SBA, that's why it was surprising to me to see those results. They're much bigger, much larger reach. So I'm glad we've been effective in tapping into Arkansas through the help of our partners like Heidi and Rudy and Jonathan. So thank you guys for your support in EXIM Bank. Yeah, so as my bio mentioned, I was an exporter for 10 years. So I was a customer of EXIM Bank for 10 years before I crossed over onto this side. And I used all the products, literally all the products at EXIM Bank that we offer to grow a small company that exported capital equipment from 1 million in sales the first year to 50 million by the fifth year. And we were on, this trajectory that just shot upward. And it was somewhat of a roller coaster ride, though. We were tied to the oil and gas swing. So back in 2014, when oil fell out at the time, it was 20, 30 bucks a barrel. We realized real quick as an equipment supply company that the first thing that goes out of budgets, buyer budgets, is capital equipment when the price of oil was so low, because they're fixing their existing equipment. They're not ordering new equipment. So it was time to move on. I saw this opportunity pop up, and one thing led to the other. And EXIM was near and dear to my heart as an exporter. And I thought more people need to know about this because there's some really great financial tools that can help a U.S. company become more competitive when selling abroad. So everything we do is for exports. We don't support imports. We don't support domestic business. It's all the export of U.S. made goods and services. And we've been around for a while. We're a 90-year-old agency. The majority of our employees are in Washington, D.C., the mothership. We've got a dozen regional offices. I'm in the Houston regional office, so I cover exporters in the state of Texas, Louisiana, Arkansas, and Oklahoma. So those 4 states I cover. So if you're an exporter in one of those 4 states, I'll be your guy, at least to start with EXIM Bank. And the whole purpose of EXIM as a government agency is to create jobs, just like any other government agency. We're concerned with jobs. We want to create jobs through exports. And, I get the question periodically, why does the government care about exports? Well, you could look at some statistics and figure out real fast that's not one of our strengths as a country. So, less than 1% of companies are exporting, for instance. and 95% of all buyers are outside the United States. And I'll give you another statistic. If you take our export value as a country over our GDP, so everything we make, GDP, how much of that are we exporting? If you look at that as a ratio, out of roughly 200 countries, we're ranked somewhere between 150 and 160. So when I looked about a year and a half ago, we had Rwanda on the left and Haiti on the right, the US in the middle, as a percentage of our GDP that's exported. We're the second largest exporter in the world. China's number one, just by value. But what I look at is the effectiveness as our country in exporting, not just dollar value, but how good are we doing out of everything we produce here? How much of that are we sending abroad? And that's really a telling statistic, right? So only 1% of companies are exporting. 95% of buyers are outside the US. And as a percentage of our export value over GDP, we're very low out of roughly 200 countries.
You know, Eric, just as a comparison, countries like Germany are like 65% or something like that.
Yeah. Oh, yeah.
Of the companies in Germany export, and China is probably that high, if not higher. Scandinavian countries even higher. So the fact that we're at 1% is really telling, as you said.
So then the next question that comes up is, okay, we're not very good at exporting, but why? You know, if 1% of companies or less are exporting, why aren't more companies exporting? And this is the slide that puts it into one word, and that's fear. It's fear. It's most companies don't know they don't know the unknown, and they don't want to know the unknown. You know, they don't know how to tap into markets outside the US. They don't know how to figure out the finance side of that equation. And, you know, you dealing with a different currency, different legal, different political, different language, different culture. I mean, the list goes on and on and on. So then it's like, well, why would I do that when I could just, you know, talk to the guys in my backyard, sell them whatever I'm trying to sell them. It's a lot easier. Well, there's a lot of reasons to tap into to buyers outside the US. Again, going back to the statistic that most buyers are outside our country. So you're limited on growth if you only focus inward in the US, and you're really missing out on lots of opportunities outside the US. What I tell most companies, if you can sell here, you can sell anywhere, right? If you've got buyers here, you can find buyers in other countries. We just have to, you know, help you. There's resources along the way to even help you find buyers. Those are other government resources. And we can get into that in a little bit. But some of the challenges that EXIM inserts itself into on the finance side of an international transaction are kind of these four areas. Pre-export cash. And what we mean by that is, you know, and Jonathan, feel free to chime in at the end or now, but when an exporter gets a purchase order from a foreign buyer and they walk that over to their bank and say, hey, I need some working capital to build this for my buyer in Peru, most banks are not going to be very helpful. They don't like the idea of giving you money to fill a export purchase order because the risk goes exponentially higher. And if you don't get paid back from your customer, how are you going to pay back the bank? You know, if a buyer here in the US defaults, you know, if you got a US purchase order, well, then you got legal recourses that are well known that you can pursue through channels and get your money back. But if you put your product in a 20 or 40-foot container, put it on a boat, wave it goodbye, and say, I'm going to cross my fingers, my buyer pays me when it gets to the other side, banks aren't going to be very helpful to you in wanting to go on that ride with you and taking that risk. So we've got a solution for that. And then some of the other things that we see time and time again is when your buyer's asking for open account terms. And what I mean by that, you're selling, you know, let's say you're making widgets of some sort and you find a buyer in Colombia, name a country. And the buyer says, hey, like the product or like the service, everything looks good, but I'm used to getting open account credit from my other suppliers, whether they're in China or Europe or somewhere else in the US. Can you do me the same favor? Give me 30, 60, 90 days to pay. It goes back to the point of, you know, do I want to take that risk as an exporter? And if I do, if I ship you this product and you don't pay me, how do I get paid? And that's where a lot of deals stop because it's very risky, right? I mean, if you fill up a container full of product, the values go up pretty quickly, 50, 100, 150, $200,000, whatever you're selling, and you can go way past that real quick. So if you put it on a boat, wave it goodbye, and cross your fingers to get paid, and you don't get paid, you got a big problem, right? So we've got a solution for that too. And let's talk about some of these solutions. So the export credit insurance is really the flagship product of EXIM Bank for small business, and it protects you on foreign receivables. So going back to the example, let's say you make, I don't know, centrifugal pumps. You got a lot of pump manufacturers. I'm in Houston. There's a lot of pump manufacturers here. So they make these centrifugal pumps, and they got a distributor. And again, let's go Colombia. And the distributor says, "Hey, I need to stock this in my store and then retail it out. So I need the 90 days open account for you to ship it, for me to stock it, sell it locally as your distributor, and then use their money to pay you back." If you get into a scenario where you're just not comfortable extending credit, come to us. We have insurance protection on that. So we can basically back you up. We can insure that foreign receivable from default. So if your buyer doesn't pay you, then we'll pay you. So you ship the product on open account, makes you more competitive, and we back you up on the payment in the case of default. So it takes away the risk, right? There's the risk is negligible at that point because you're going to get paid one way or the other, whether it's through your buyer or the government via EXIM Bank. The sales tool is in my opinion one of the biggest parts of it, because as a prior exporter, that was how we won deals. We can't always say, "Wire me money and I'll ship you the product." Forget it. I'll go to the next person, right? You're not competitive. And when you're competing for global business, you got to be competitive. Unless you have this, super unique and custom product that nobody else makes. But, I don't really see that anymore. There's always somebody else making the same thing. So it allows you to compete. You can offer open account to foreign buyers. We'll back you up on the payment. And they're small fees. They're insurance premium fees, and we'll get into that. The other thing is it's a financing aid. So going back to the example of, your bank not being very helpful to give you money on export orders, if we insure the foreign receivables, a lot of times they'll finance that for you, because a receivable is an asset on the balance sheet, right? Whether it's domestic or foreign. But a foreign receivable is a lot less bankable than a domestic receivable through your lender. But if we say, "Hey, we'll insure the payment," then the bank will say, "Okay, well then I've got two channels for payment. If my exporter doesn't pay me back on the loan, EXIM will pay them and they can pay the loan back." So it takes away the risk and it opens up access to money. Really, it boils down to 4 ways of getting paid from a foreign buyer. And there's risk levels, whether it's low or high for the seller or buyer. So the 4 ways of getting paid are cash, LC, cash against documents, or open account. So from the seller perspective, if you say, "Wire me money," there's no risk to you, but all the risk is on the buyer side. Or you say, "Give me an LC," and there's a little bit more risk on the seller side than there is on the buyer side, because there's like documentation risk and performance risk. Cash against documents comes a little bit better for the seller. A little bit more riskier for the seller. And then you go into open account, which is the most riskiest for the seller. But when we take away all the risk with an insurance policy, that kind of goes back into the low risk category. And then this is just kind of a flow on how it works, right? If you're like, "Hey, this sounds really good," we like to see a buyer first, a negotiation and process. "Hey, I've got this buyer," and, name a country. We're talking about the contract. We intend on offering open account. Let me go ahead and apply. That once you apply and you agree on the terms, we approve the policy. Once you have an approved policy and your buyer's in that policy, you can ship the product, you report it in our online system, and then you pay the premium for the insurance. So it's relatively straightforward. It takes a good 2 to 3 weeks to get a policy in place for an exporter. So we're relatively fast, in my opinion. Commercial and political risk. So what buckets of risk does it cover? We put it into these 2, commercial and political. Customer goes bankrupt, or they're just insolvent. Protracted default, that's a fancy way of saying more than 90 days past due. So if you sell, net 60 for some kind of container full of centrifugal pumps, you ship it to Colombia, day 60 comes, hey, where's my money? And they don't, respond to you via email, they don't call you back. We want you to try to collect for 90 days after the due date. That's the wait period under protracted default. And if you can't get your money, then you can file a claim under commercial. There's the political bucket. As you can see there, those, I don't see a lot of very, very little political risk claims, but it's still a risk. What it doesn't cover, and that's easier to describe, it doesn't cover disputes with the buyer or contract dispute. So going back to the example of centrifugal pumps, let's say you're selling a container full of 50 horsepower centrifugal pumps. You load up the container, gets to Colombia. Colombia opens up the container and says, hey, these are 25 horsepower centrifugal pumps, not 50, the 50 horsepower that I ordered. You come pick up your stuff, not interested. That's not eligible for a claim because that's a contractual dispute. You're selling something that they didn't order. We don't see a lot of it, but I do have to, mention that is not a risk that we cover. So that's a lot on credit insurance. The second solution is the working capital. And this is getting you a line of credit to fill export purchase orders. It's a asset-based line of credit, ABL line of credit. So basically you would pledge assets like inventory, work in process, finished goods, receivables. You pledge these assets to the bank on a borrowing-based document. So you get we call it a borrowing-based certificate. It's a document that states, hey, I'm going to be pledging these assets so I can draw down on my line. But you still have to get underwritten through the bank, whichever bank you go to. You have to get underwritten. So if you need, let's say you get $1 million purchase order and you need $500,000 and you go to your bank and say, hey, this EXIM solution sounds like a good solution to my problem of not getting access to money. Can you go to EXIM for the guarantee? They'll say, sure, but you still have to meet all of our credit standards to access the money you're asking for, right? So you still have to meet all the ratio. If you want to borrow $500,000, you have to have the balance sheet and income statement to borrow that $500,000. And they'll just purchase our guarantee on the loan. So we don't make the money easy to get. We just make it accessible because otherwise most banks just give a hard no on export money. There's no min or max. Our max, we've done, I don't know, $100 million facilities. Anything above 25, though, would definitely go to our board, and then they have to vote on that. We don't see a lot of those big ones. I would say the sweet spot that we see a lot of is probably 1 to 10 million. We see quite a bit of that. The SBA will be speaking here shortly, so they stop at 5 million. We go past it. So when we're both on a webinar together, I usually say, hey, if it's below 5 million, talk to the SBA. If it's above 5, talk to us. That's kind of the easy way to make that decision.
Now, Eric, correct me if I'm wrong. Even though, as you stated, the sweet spot is between 1 and 10 million, the reality is that you guys actually have no minimum, right? You can go significantly lower than $1 million. Is that correct?
Yeah, so EXIM Bank as an agency, we don't have a minimum. The minimum is usually set with the banks. And I would say most minimums that we see with the banks are around 500K. And that just depends on the relationship they have with their customer and what they're looking for. So we don't have a minimum to guarantee the loan, but the banks generally do.
Thank you.
Eric, you got a couple of questions here in the chat. One of them being, can you kind of talk about the cost for the credit insurance?
Absolutely. Great question. So we have 4 different policies. So, it depends on, hey, I just got this one opportunity that I want to insure, or I've got multiple opportunities. And just to kind of give you a rough number, right? Because there's a lot of variables involved. I would say anywhere from 0.4 to 1% will give you a good range on what it would cost. Most are in that 50, 0.50, 0.60, 50, 60 basis points. So, on a $50,000 shipment, let's say it's 0.55. On 50,000, to insure 95% of that under our multi-buyer policy, it's going to cost you $275. So $275 to insure 95% of the 50,000 on the multi-buyer. So
that's worth being able to sleep at night for sure.
Absolutely. Yeah. It's
You
small,
got one
small
more
fee.
Right, exactly. You have another question in here. Could currency transfer risk be explained?
Yeah, we don't see a lot of that risk being eligible for a claim just because there's not a lot of it. In currency transfer, it has a lot to do with currency inconvertibility. So if you're selling, if you're selling a product into a mark on an open account, and that country, that buyer is having some kind of currency exchange issues where they can't get their local currency into dollars and back to you, there's a currency inconvertibility issue. We can look at that as being eligible for a claim. We don't see a lot of it, but it's really about your buyer not being able to convert their local currency into dollars and get that back to you.
Yeah, I suspect that rubles right now might be part of that.
Yeah, we also, I should mention, when it's a slide, further down the line, but we have a country limitation schedule. So it'll show countries that we're open in and closed in. Most of the countries, you could probably guess what they are. That won't be any surprise.
This Great. Is the That's process. All the questions for now. So feel free
to. Okay. Yeah. Stop me at any time. I prefer it to be a discussion. Thank you. Working capital process. So when you need money, I would say start with us on an export working capital facility. Start with us, and we'll kind of talk you through the process and connect you with either your existing bank or help you find a new one. Jonathan's here with his bank, so he can chime in on that, I'm sure, at some point on how he can help you as your local Arkansas guy. There you go. I gave you a little commercial there. So if you need some money, start with us. But if you have an existing relationship with Jonathan or whoever, your path of least resistance is starting with the bank you already have a relationship with. So we call this medium-term finance. What this is really, it's financing your foreign buyer. And as a prior exporter that sold capital equipment into Africa, we had a lot of success with this. The idea behind it is financing your foreign buyer to buy your capital equipment if that's what you're selling. It's generally for capital equipment. And the compelling sales point for the exporter is not only are you selling the equipment, but you're potentially facilitating getting them a loan in the U.S. that we guarantee at a much lower cost than what they can obtain locally. So when I was selling into West Africa, we saw term sheets 20, 25, 30% a year. So if you're selling equipment, I told buyers all the time, look, if you Google Houston equipment providers, you're going to get 100 pages in Google on companies that sell equipment. But not everybody's selling the idea of financing that equipment. Right. So if you're providing equipment, one way to make yourself obtain a competitive advantage is offer potentially your buyer in another country to get a loan in the U.S., 3 to 7 year term loan. And these are 25 million or less for capital equipment. So pretty compelling product there if you're selling CapEx. About 2 years ago, a little over 2 years ago now, we came out with a new product. It's called the Make More in America initiative. And that last product that I referenced, financing a foreign buyer, we're reversing that. So we're now financing a U.S. company for a project or to expand a facility, to acquire real estate, to bring in capital equipment, as long as we can tie what we call an export nexus to the loan. And what we mean by export nexus is as long as the sales, as long as you'll generate 15 to 25% of export sales from that loan, then we can tie an export nexus to it and be a direct lender, not just a guarantor, but a direct lender right now to a U.S. company that is looking to either expand or acquire real estate, or you can import. It doesn't even have to be US made. You can import capital equipment. So if you're some kind of manufacturing facility and you're wanting to expand and you're having trouble getting a loan, a traditional loan in the banking system, we could potentially underwrite that and be a direct lender. There's two ways that we underwrite this deal. One is through what we call corporate finance, where we just look at historical statements, the balance sheet, income statement, cash flow. We just look at it and run the ratios and say, yep, they meet the credit ratios, they're good to go. Or two, it's under a project finance scenario, which means we look at future cash flows to repay the loan. What I mean by future cash flows is your offtake agreement, right? So if you're just making something up, if you're going to build a natural gas plant by the coast in Texas and it's going to export LNG to a foreign country, and you've got 10-year offtake agreements to repay that loan, but you can't get money through your bank because it's future cash flow, we can potentially look at that as a way to repay the loan under a project finance scenario.
Pretty sweet deal.
This just kind of gives you some ideas on what we can finance, whether it's a new facility, expanding an existing facility, CapEx. The CapEx doesn't have to be US made either. You can bring in outside the country equipment for your facility under this program. All the other programs, our policy is greater than 50% US content. And I'll talk about that in a second. But we get the export nexus under the Make More in America is the sales, the export sales that will be generated from the lending facility.
Yeah, so, Eric, and correct me if I'm wrong, though, this is a fairly new program for you guys, and you've already seen some pretty good success off of this. So, this isn't one of those just traditional EXIM bank opportunities. This could be very big for our exporters in the
Absolutely.
U.S.
Yeah, it's the government's attempt to try to really increase the amount of manufacturing in the United States. That's currently a really significant push on part of the federal government, is to try to really bring manufacturing back to the states. So yeah, this is a very important and new program to accomplish that.
And Eric, I just want to point out it's coming up on 2:40, and we need to leave Mr. Harley enough time for him to be able to
let me run through
his slide deck.
I just got a few more slides. Thank you, Jonathan.
Perfect.
So restrictions, we can't do any military products or military buyers. There's a few exceptions that we could talk about. It's got to ship from the US. We're open in over 180 countries out of roughly 200. If you want to check the country that you're selling to as to whether or not we're open, you can go to what we call our country limitation schedule, CLS. So if you go into exim.gov and search country limitation schedule, you'll get a web page that will show you all the countries we're open and closed in. Our eligibility. So to qualify outside the Make More in America, the new product, outside of that one, we need more than 50% US content on whatever you're selling. It's got to ship from the US and be greater than 50% US content. That's on your cost, right? So if you're selling a product at $100, but your cost is $70, we're going to look at 70 and say $36 out of that 70, which is more than 50%, has to be US content. For the credit insurance and generally for the working capital, banks like to see 3 years operating history, a DUNS number, UEI. We could talk about that. I think that's it. So there's how to contact me. If any of this sounds good and you want to do a follow-up, reach out to me by email or cell phone right there. And thank you guys again for the time.
Perfect. Thank you, Eric. There are a couple more questions in the chat real quick. One of the people has a client in Mexico and they normally ship to Laredo. Are you aware of a restriction there?
You mean Laredo on the US side, I'm assuming. So like if you're selling on an open account to Mexico and they say, hey, drop it off in Laredo at the border, would that qualify for insurance as an export? The answer is yes. We can structure that.
Perfect. Yep. And then another one on here, you had mentioned no military or defense related projects. Does this also include dual purpose inventories?
Yeah, products or buyers, not projects. So the three exceptions are dual use, drug interdiction, and humanitarian. So if you're selling products or services that meet one of those exceptions, then we can talk about getting past that policy.
Nice. Good answer. Good answer. All
Yep.
right, Eric. Hey, man, that was awesome. Thank you very much for
Thank you.
taking the time to explain that. Let's move over to Mr. Harley real quick and give him some time, as well as the SBA.
Hey, thank you so much. Yeah, every time, Eric, you do your presentations, I learn something as well, something new. So I really always appreciate the opportunity to share time on such an event like this one. So are we ready to
Yeah,
share?
let's go. Yeah, let's go ahead and put your slides up, Reggie, and we will go from there. Eric, I take it you stopped sharing. Yeah, okay, so we're good.
Ooh. If we can get to the beginning. Are we all right?
Yeah, we're good.
Excellent.
Hey, Miss Heidi, can you put up Reggie's slide in terms of his intro or the introduction to him? Maybe not. Maybe not. Well,
Well,
I'll
while
tell you
you're
what.
doing that,
In the interest of time, let's go ahead and just get going, Reggie.
absolutely. And I can just say a few things. First off, I really do appreciate the opportunity to present. And I want to say hey to all of you that are out there. And thank you for taking the time to listen in. And it's our hope and our belief that just based on what we've done in the past with these, that this is a great benefit to those that do tune in and listen, and especially for those that have an opportunity to ask questions. We always invite those. Thank you, Jonathan, for being able to uh, help out, not just help out, but be the leader on the deck and have things work that way. And certainly, Regions Bank, one of the SBA's top shelf partners. Appreciate them always. And of course, Rudy and Heidi, thank you. I did all my thanks on the front end, just in case I run short of time on the back end. I'm Reggie Harley with U.S. Small Business Administration. I'm an export finance manager, which is a fancier name than I ever thought I'd acquire in my work life. And what I do is help support those small businesses and medium-sized businesses that export, in primarily with financing, but also doing whatever counseling and equally as important, helping to match the businesses to resources that are out there that can help move them along in their exporting opportunities. Also train and provide information and support to the lending community with the hope and the intent that by doing so, the lenders will be more receptive to and likely to provide the financial support and other products to support businesses that export. I've been with the SBA for nearly 30 years and have enjoyed 29 of them. I have a presentation here that just covers a few things, and understanding that have a pretty good number that have not exported. I just want to be able to cover just a few questions that you might want to pose and have answered. What we're looking for, and I think Eric would agree, we're always almost always looking to work with those businesses that are export ready. And there are all sorts of resources out there. That probably be another presentation that the deck does. But there are all sorts of resources out there that can help you become export ready if you're not yet there. Some of these questions that I'm going to present can help you make that determination. So I'm going to go through that part of it really, really quickly, if you don't mind. First and foremost, I wanted to show what the SBA defines as an export. And you can read this, that's on the screen. An export transaction is a production and payment associated with the sale of goods or services to a foreign buyer. And I think one of the takeaways that you can have with this is that doesn't really, well, I'll just put it this way. The key thing that we want to know is who is paying. If a foreign buyer is paying, then we consider it an export. So to Ms. Morales, the question that you posed relative to the fact that you ship to Laredo as opposed to your product going across the border into Mexico, for us at the SBA, we do consider that an export because it isn't as much the location that your product is going to as it is who is going to pay you for it. And so if your Mexican buyer is the one that's making payment, then we consider that an export. Okay. Unlike the EXIM, we don't have a minimum content requirement, so that we certainly can support drop shipments if that's something that you're doing. If you're making, if you're a business here in the U.S. and you make a purchase of a particular product in India with the intent of shipping it, having it shipped, I should say, to I don't know, to France, then that's something that we can support as well. It doesn't have to be manufactured here, though we always do encourage that. We also have what's called an indirect export. That is a situation where I guess I can just use the example that is often used, where there's a company in Arkansas that manufactures seat covers for airplanes, and they sell to Boeing aircraft in Seattle. We understand that Boeing is, of course, an exporter of their products, so that we can, our products that we have can support, our financing products can support that transaction or those transactions, since it is going to be what we refer to as an indirect export. So that's a category that is often increasingly used for the financing that we do. And obviously it's a very safe one, because in actuality, it's a domestic sale. If you're looking at it, it's a domestic sale, but it is still supporting the export that Boeing is doing. Okay, I won't worry about that. So here are the questions that I just have posed. And of course, we're not going to spend a lot of time with this, but I just want to put them out there. Are you export ready? Are you ready to export? Does your company have a product or service that has been successful already, perhaps domestically, and that now you're looking at opportunities to sell abroad? Maybe it's a product that would go very well with our neighbors, meaning Canada and or Mexico, or into the Caribbean. And it would only take a bit of tweaking in order for that to happen. But there you are, expanding your opportunities if you do make that decision to just go beyond the U.S. shores. Does your company have, or is your company preparing an international marketing plan? We just believe, from our vantage point, that it is critically important to put on paper your plan, understanding what your goals are going to be, what your strategy is going to be, what countries are you going to select first and why, what products, if you have an array of products, which ones do you think are those that are most in demand in particular countries? Those kinds of things are the kinds of questions that you're going to want to have answered. And of course, how are you going to market those? If there's something about your website that you may have to make changes to in order to be able to market into those to those countries.
And Reggie, if I can jump in for just a second here, getting back to the comment about do you have products that you're selling successfully, in this case, in the United States? In many cases, you may be developing new products that are, one step above what you've been selling, and you still have a product that has been selling well in the United States. Those products that are, just for lack of a better word, a second tier now, are still very sellable in many, many markets that perhaps a cutting edge brand new innovative stuff is not necessarily what they're looking for. And so there can be secondary resources or sources of income by selling into countries that would be very satisfied with these second tier, second generation products, while you're now developing the newer technologies. So don't overlook those markets.
Absolutely. Good point, Rudy, and thank you for sharing that. Let's see where. Does your company have sufficient production capacity? And the point here is simply the fact that you may be successful right now doing what you're doing, and that success has you perhaps at capacity. But if you're thinking about now selling abroad and having to meet the demands of yet another market or other markets, is your company set up in such a way that it has the capacity to include that additional um, those additional opportunities? So again, these are just questions that you want to have answered. We always explain or suggest that exporting, for those who are new to export, is a medium to long-term strategy. It's not something that if you decide you're going to do it today, that you're going to do it by the end of the month. There's just so many things that you're going to need to answer and put in place before you can actually begin the exporting process. Does your company have the financial resources to actively support the market of your products? One of the things that Eric pointed out in his presentation was the fact that in many instances, you're offering payment terms if you're going to be competitive when it comes to selling abroad. 90 days, 120 days is not an unusual time frame in that regard. It can even be longer than that, depending on what it is. I have one company that I work with where it's a 6-month time frame between when they ship and when they get paid. That's an extraordinarily long period of time to wait for your payment on something. And so financing is oftentimes necessary, working capital, in order to tide the company over. But you need to be able to analyze that on the front end so that you're not going to be stuck out with products that are, your receivables that are all out there, and you're having to collect on those receivables, but it's taking, in a longer period of time than you may have been accustomed to with your domestic sales. And as a result of that, you're in a cash crunch. You're in a bind, can't buy more inventory, et cetera, because of it. Is your company's management committed to developing export markets? And are they willing to dedicate staff time and resources? What we find in many instances is that those in the sales department are gung-ho about selling into international markets, and they are the ones that are leading the charge on this. And certainly those in the upper level of management are sort of salivating over the opportunity to expand their those markets into which they sell. But have you brought along the other aspects of your company, on the manufacturing side, on the floor, on the side that does the packaging and shipping, and the fact that they now have to start thinking about shipping into foreign countries and all that goes into that? Even the accounting department and bookkeeping, they're now having to institute new things that they've never had to consider. Tax implications when it comes to selling into foreign markets as relates to the United States, though. And so that there's in so many additional questions and issues that may come up, you want to make sure that you have vertically integrated and have a buy-in by all aspects of your business. And I know that most businesses are pretty autocratic. Whatever the boss says goes. But especially in some larger businesses, larger, small businesses, this can be an issue, and it can really be one that is only going to get played out, and maybe not in a good way, once you start doing this and you're saddling them with these additional responsibilities without proper training and guidance and support to help them become comfortable with this and successful at it. Is your company committed to providing the same level of service uh, as you provide to your domestic customers? And this is just simply the question of, are you going to be able to, if you say are providing engines, selling engines, and you provide service after the sale, are you going to be in a position to do that when you're now selling the engines, not just into, let's say, Nebraska, but selling into Namibia or selling into, Kenya or selling into India? Can you still provide that level of service for your product once you're starting to sell into those foreign markets? Does your company have adequate knowledge in modifying the product and the packaging and the ingredients to make the foreign import regulations and cultural preferences? I'm based out of New Orleans, Louisiana, and a lot of what we export down here are agricultural products, and even more so products that are already packaged, spices and the like, mixes. And oftentimes, and in almost every instance, if they're going to get into exporting, then you're going to have to do some things that you hadn't done before. Be aware of what you may run up against if you're selling into, say, markets that are Islamic, or markets that are Jewish, and they have certain food restrictions that we may not have to contend with so much here as a nation. Those, by way of an example. There are even some products that just aren't even, cannot even be imported into certain countries. And so if what you're selling contains any of those ingredients, then you may find that you're going to have to come up with a different mix or not be able to sell into that market at all. And certainly there are the cultural preferences as well. And we even have issues around the name of the product, and understanding that there has to be some cultural sensitivity in that maybe what your product is called in English, if you translate it into another language, it is a word that has a connotation that isn't very appealing, may even be insulting, or it may be comical and something that people aren't going to take seriously. So these are the kinds of things that you're going to think about as you're selling into these foreign markets as well. Does your company have adequate knowledge in shipping its product? And you can read the rest of that. We oftentimes recommend that you use a freight forwarder if you have not done exporting before. And so that freight forwarder will, if you upon interviewing them and getting comfortable with them and them understanding what it is you're selling, that they can help facilitate the logistics of selling into foreign markets, whatever foreign market it happens to be, and whatever product it happens to be. They will bring that knowledge to the table so that you don't necessarily have to have the depth of knowledge in-house. You're buying it by using a freight forwarder to help you get the products into the particular markets. And there are other shipping issues around pricing your product that you're going to need to know as well. And again, a freight forwarder can help you with that. Does your company have adequate knowledge of export payments, mechanisms, such as developing and negotiating letters of credit? And this gets into certainly some of that which Eric talked about, the payment methods. And this is something that you may need to know. Again, if you're selling cash in advance, some of this isn't as important, but I think that most of the companies find that, for the reasons that Eric pointed out, that unless your product is just extremely unique, or as he pointed out, customized, you're going to, in all likelihood, have competition out there, so that you're going to need to understand that if you're selling on terms, that you're going to have to understand the different payment methods that you have available to you. Those are the questions that I have. I'm going to run very quickly through the products that we offer. What the SBA offers are guarantees to help incentivize the lenders to do the financing. The international trade loan is one of those. We offer the lender a 90% guarantee. It's a term loan. It can be for anything, meaning working capital, real estate. Maybe you need a warehouse, or you need to expand your warehouse. That's a real estate. Or equipment. You need additional equipment. It can be used for those purposes and others. Let me just point out that these slides upon request, I believe, Heidi, is that how it works, will be provided to those that ask. And so I'm more than happy to share them at the conclusion of this or thereafter. And so there's more on this one around what the international trade loan does, but just suffice it to say that we offer these loan products, again, to incentivize the lender to make the loans. And so this one, as I said, that international trade loan is a term loan. We have a working capital loan product that is available as well, also has a 90% guarantee that we offer the lender. It can either be asset-based or it can just be a transaction-based loan, which is a purchase order or a contract or a series of them that we can support. As pointed out previously, it's a $5 million maximum on those that we do. And we certainly have lenders, because we work with credit unions and non-bank lenders and others, even micro lenders, so that our loan sizes sometimes are as small as $10,000 that we do to support exporters. We have this one called the Export Express loan. We sort of refer to this one as the SBA Swiss Army knife, because it is a loan that can either be a term loan or it can be a revolving line of credit. And you can see what the terms of this one can be, and it can be used for all those things that I've mentioned as well, meaning real estate, even though it's a smaller loan of a maximum of $500,000, can also be used to purchase equipment or, again, for working capital. That's outlined here. And that actually concludes my presentation, but I did want to make one other mention, or two other things as I close out. One, I just want to mention that we also, the SBA provides monies in a way of a grant. And you may know, those of you out there, that Arkansas has been an applicant for this grant for many years. It's called the STEP grant, State Trade Expansion Program. And it is administered in Arkansas by the World Trade Center in Rogers. They do a fantastic job of it. And the purpose of the grant is they receive the grant and they administer it, and they then provide grants to businesses like yours that are looking to, let's say, attend trade shows to help market their business, to do outreach, to do trips abroad, working with the U.S. Commercial Service, maybe to do Gold Key outreach. Yes, thank you. Or if you just need to modify your website or go to a trade show somewhere, it can be used for that. And it's a cost reimbursable grant, so that a certain percentage, and that may vary depending on what you're using it for, or whether it's your first time using it or a second or subsequent time that you're using it. But sometimes, depending on which one it is, it can be up to a 75% reimbursement of that which you expend for the activities that I've mentioned. So this is something, we're talking about free money here. Government doesn't often talk about that, but it's available to you. And if you need more information on that, I'm sure you can reach out to any of us that are presenting here today, and we'll be able to share more information about that, or a link to where you can find that out on their webpage. And with that, I'll conclude.
Reggie, thank you so much. That was great information. Ladies and gentlemen, there's 2 points I want to make here. When especially because there's very few people here who have dealt with the SBA before. Usually, when a bank refuses to give a line of credit or a loan or whatever, it's because, assuming that you have good credit rating, it's because you don't have enough assets, enough collateral for them to be comfortable. This is where the SBA really shines. Basically, it looks at those companies that the really only limiting factor is an insufficient amount of collateral, and it provides a guarantee to XYZ bank that now makes them feel comfortable, because now the U.S. government is backing up should the company default for whatever reason. And so that's the reason that the SBA is so important. The other thing that you may be asking yourself, well, so why is the U.S. government doing this? Why are they providing these services? And it goes back to a comment that I made much earlier on, and that it is that the only way that wealth is grown is by bringing it from somewhere else. And so consequently, exporting is incredibly important to the welfare of the country, and that's the only way that the economy of the United States can grow, certainly sufficiently, and therefore the number of jobs is by exporting. And so it is in the interest of everyone, including the U.S. government, to make sure that the United States goes from being a 1% exporter to a 10% exporter. The wealth of the country would be increased significantly if we were able to increase exporting by even a couple of points. So that is the reason that we put on these webinars, to give you the know-how and the resources to be able to go out there and feel comfortable about exporting. And so with that, Jonathan?
Yeah, just a couple of housekeeping items here. Miss Heidi has already put the slides in the chat, but on Friday she will send out an email to each of you with the slides of both presentations, as well as a link to our YouTube channel for you to archive this presentation for you. Regarding the STEP grant Mr. Harley was speaking about, Denise Thomas at the World Trade Center is just an amazing strategic partner to work with. EXIM, SBA, DEC, she's heavily involved throughout. So if that's something you want to explore, reach out to us and we'll gladly make an introduction for you. And the last thing I'll mention real quick about the banking aspects of things. Don't just assume that your bank has the resources or the products to handle the services that you're trying to get. Speak to them, whoever your bank is, speak to them on the front end before anything is done. Not all banks play in that field. So make sure that you ask the questions before starting that process. In October, we've got a boot camp, if you will, called Grow Your Exports, which is a 5-class series that kind of breaks down different sectors of getting ready to export and the financial portion of it and things like that. So again, talk to your bank on the front end and then join us in October for that boot camp, and we can kind of do a deeper dive into that, if you will. So
Jonathan, I hate to I don't want to extend this unnecessarily, but I just want to
no worries.
piggyback on your point, especially as it relates to going to your bank, as I'm speaking to the businesses out there. And if you walk into your bank, which we think is always the one that knows you best and will most likely want to support your growth. But we do know that sometimes too many times when a small business owner goes into a bank and they ask about getting support for an invoice or a PO that they receive from a foreign buyer, that they get a glazed over look, or the lender just doesn't know how to handle that. Or they'll say, we'll be glad to provide the financing. We can't include this in the collateral base, just like Eric talked about before. We can't include this in the collateral base, but we can do a loan against your house as collateral or something of that sort, or your business location. So my point in bringing this up is to simply say that sometimes when you contact Eric or you contact me, we can help you shortcut the process so that instead of your having to knock on the doors to figure out who in the bank, if anybody, understands how to do this, we'll already know whether your bank does it. We have information on every bank in our markets, and we can tell you if they don't do it, who may have an appetite for that, which you're trying to do. So I just want to make sure that you know that that's another role that you can play in this.
Excellent point. You're absolutely right. Mr. Harley, thank you so much. Eric, thank you for your presentation. It was fantastic. I'm really excited about the Make More in America program. Also, thank you again to, as you can see, we have a little follow-up survey on there as well. If you could kind of take a minute to let us know what we did right, what we can improve on, or what you thought of it, we would greatly appreciate it. Those only make us better. Thanks again to the Arkansas Economic Development Commission and Arkansas Manufacturing Solutions for their support in allowing us to put these webinars on free of charge. So thank you all to everyone that has taken time out of their schedule today to be with us. If you have any questions, reach out to us, and I hope you all have a great rest of your week.
Thanks everyone.
everybody for this great info.
Yeah, we'll be
Thank
putting
you.
on another class in about a month, so be looking forward to that as well. It'll be about other financing bank options. So look for that.
Thank you all.
You guys are the best, Rudy. Take care. Thank you.
Thank you all.
Bye.
Thank y'all.